Good morning, everyone, and thank you for choosing Financial Insights today. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Financial News, August 8, 2023. We saw a mixed bag of performance across Asian stock markets today. Hong Kong and China's markets experienced declines, reflecting ongoing concerns about the economic challenges these regions are grappling with. On the other hand, equities in South Korea gave up earlier gains. Meanwhile, Japanese and Australian shares managed to maintain modest increases, bolstered by their economic resilience. Shifting our focus to the United States, futures for U.S. stocks had a slight slip. This comes after the S&P 500 recently rebounded from a 4-day drop, with the Dow Jones Industrial Average marking its most significant gain in over 7 weeks. This resurgence helped assuage concerns stemming from the previous week, which marked the worst performance for U.S. equities since March. The rally on Wall Street was slightly tempered by fresh comments from a Federal Reserve official. These comments emphasized the potential for further interest rate hikes aimed at curbing inflationary pressures. This brings attention back to the question of how monetary policy will evolve to address the ongoing economic landscape. Speaking of economic landscapes, all eyes are on China as traders eagerly await the release of forthcoming trade data scheduled for tomorrow. The recent period has revealed signs of deflationary pressures affecting Chinese businesses. This phenomenon has coincided with a weakening growth trajectory and a decrease in foreign investment. The latter has reached its lowest level in a quarter century during the second quarter, posing substantial challenges to China's economic landscape. In the realm of bonds, Treasuries stabilized in the Asian market following an increase in yields on the 10-year bond last week. These yields reached their highest levels since November, garnering attention and influencing the market sentiment. Federal Reserve Governor Michelle Bowman's comments further contributed to the yield movements. As we look forward, the bond market braces itself for a significant round of refunding auctions. These auctions, totaling $103 billion from 3-year, 10-year, and 30-year maturities, mark a $7 billion increase from similar auctions conducted earlier this year. This development underscores the growing challenges in the bond market, driven by economic uncertainties and shifting investor demands. Turning our attention to currency movements and the global economic outlook, the yen has experienced declines against the US dollar. This movement is further accentuated by a slowdown in Japanese workers' wage growth during June, casting shadows on the Bank of Japan's aspirations for sustainable inflation. In the United States, all eyes are on the impending release of the Consumer Price Index, CPI. This key economic indicator is expected to provide insights into the Federal Reserve's policy outlook. John Williams, president of the Federal Reserve Bank of New York, has emphasized the importance of maintaining a restrictive policy stance, hinting at the possibility of rate cuts next year if inflation decelerates. Before proceeding with our analysis, we would like to remind you that your support is very important to us. If you enjoy this video and find our content helpful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and provide you with even more quality content. Now, let's get back to the news on the financial markets and the latest updates. Market sentiment continues to be influenced by speculation about the potential for an impending recession in the United States. This sentiment has been fueled by the Federal Reserve's aggressive interest rate hikes, which have amounted to a 5.25 percentage point increase over the past 16 months. The inversion of the Treasury yield curve, a traditional signal of an impending recession, has added to these concerns. Despite these apprehensions, the U.S. economy has displayed resilience, relatively unaffected by the Federal Reserve's aggressive rate hikes. Billionaire hedge fund investor Bill Ackman's decision to short the 30-year bill is noteworthy, following Fitch Ratings' downgrade of the U.S.'s long-term credit rating. With inflation data in focus for the coming week, some investors are positioning themselves for a potential pivot in the Federal Reserve's policy stance toward easing, regardless of whether a recession materializes. As we wrap up, let's take a look at recent market movements. Market sentiment has turned cautious after a day of choppy trading on Monday. The US dollar is gaining strength against its counterparts, buoyed by safe haven flows. Central bank communication remains a key driver of market direction, and investors are eagerly awaiting the release of goods trade balance data and the IBD/TIP Economic Optimism Index from the U.S. China's trade data, revealed during the Asian trading session, showcased a widening trade surplus but also concerning declines in exports and imports. This somber sentiment has extended to U.S. stock index futures, which are trading in negative territory early today. Exchange rate movements reflect the U.S. dollar's strength against major currencies. The market heat map illustrates these changes, shedding light on currency pairs in focus. USD, plus 0.21%. EUR, minus 0.21%. GBP, minus 0.24%. CAD, minus 0.47%. AUD, minus 0.81%. JPY, minus 0.38%. NZD, minus 0.80%. CHF, minus 0.13%. Euro to US dollar, pound sterling to US dollar, Australian dollar to US dollar, New Zealand dollar to US dollar, and US dollar to Japanese yen all have their unique stories, reflecting market dynamics and economic data. Gold remains defensive, influenced by the benchmark 10-year U.S. Treasury bond yield and gold ounce per U.S. dollar movements. In the cryptocurrency realm, Bitcoin and Ethereum are maintaining their positions, underscoring their resilience in this ever-evolving landscape. Key events this week. U.S. wholesale inventories trade, Tuesday. Philadelphia Fed President Patrick Harker speaks, Tuesday. China CPI, PPI, money supply, new yuan loans and aggregate financing, Wednesday. India rate decision, Thursday. U.S. initial jobless claims, CPI, Thursday. Atlanta Fed President Raphael Bostic pre-recorded remarks for employment webinar, Thursday. UK industrial production, GDP, Friday. U.S. University of Michigan Consumer Sentiment, PPI, Friday. Some of the main moves in markets. Stocks. S&P 500 futures fell 0.1% as of 10:33 a.m. Tokyo time. The S&P 500 rose 0.9%. Nasdaq 100 futures fell 0.3%. The Nasdaq 100 rose 0.9%. Japan's Topix index rose 0.4%. Hong Kong's Hang Seng index fell 1.3%. China's Shanghai Composite Index fell 0.4%. Australia's S&P/ASX 200 index rose 0.2%. Currencies. The Bloomberg Dollar Spot Index rose 0.2%. The euro fell 0.1% to $1.0986. The Japanese yen fell 0.4% to 143.07 per dollar. The offshore yuan fell 0.2% to 7.2167 per dollar. The Australian dollar fell 0.3% to $0.6550. Cryptocurrencies. Bitcoin was little changed at $29,133.65. Ether was little changed at $1,826.15. Bonds. The yield on 10-year Treasuries declined 3 basis points to 4.06%. Japan's 10-year yield advanced 1.5 basis points to 0.635%. Australia's 10-year yield declined 11 basis points to 4.08%. Commodities. West Texas Intermediate crude rose 0.2% to $82.14 a barrel. Spot gold fell 0.1% to $1,933.74 an ounce. In conclusion, we'd like to thank you for watching Financial Insights today. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more interesting news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.